But do you think it might? Do you think that it might become a rolling stone and gather a lot of momentum and start becoming our problem for 2018? Protectionism, putting up borders, that kind of thing.
I think that's definitely the risk. Yeah. I think most people took Donald Trump's first year in office and assumed that there was just more bark than bite. You know, of course, he campaigned on 45% tariffs on Chinese goods, and he campaigned with a lot of harsh rhetoric around protectionism. But then his first year in office, there wasn't much follow through on that. I think though that it took him a while to really put his team in place. It took him a while to develop his policies. And I think the true Donald Trump is kind of coming through. I mean, if you look at through history, the one thing that's really been consistent in terms of his statements has been somewhat of a protectionist leaning, whether it was against Japan in the 80s, against China more recently, but I think we're going to start to definitely see more protectionist policies. And certainly this move on solar panels and washing machines, it's a serious move.
But some benefits, too, from some of his moves, like the tax reform. We were talking yesterday about Wynn Resorts. That company, on the back of their earnings, able to save something like $350 million. What would you make of that?
Yeah, I think the corporate response to those tax cuts is really going to be the big differentiator in terms of the economic impact, because, of course, there's a really wide range of the impact that it could have. And now you are starting to see corporates either offer larger bonuses to employees, hike wages, bring money back, and promise some investment back in the U.S. It's unclear if they'll bring it back just for if they'll bring it back for investment, or they're going to bring it back for stock buyouts. But the corporate response, and of course, like Wynn Casinos, it could make this tax reform, I think, have maybe potentially bigger economic impact than initially assumed.
How are you lining up your positions for 2018? Are you moving the pieces quite a bit, substantially compared with where you ended last year?
Well, no, not substantially. Not substantially. I think the economy looks like it should move along similar to last year, albeit probably not as exciting. Because last year, of course, you had strong growth globally. You had pretty explosive market moves. I think we're thinking of similar to 2017, but of course just not as big of a move. So we're thinking still broad, synchronized global growth, improved economic fundamentals in emerging markets. Still favorable monetary policy, even though the Fed is normalizing. You still have the ECB and the BOJ providing support, and so that should keep the economy moving along in a pretty positive way.